Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's February 9th. This will be our chart lesson for the day, and another big range day, really. And we really closed almost. Look at all the movement we had, and we really closed almost flat. We actually closed. Let's make this a little bigger. We actually closed previous day at 1852.50, and we closed today 1848 and a quarter. So about 4 points different, but look at the movement we had, and they're pretty clear trends from one side to the other. Um, you really didn't know where the other side was down here until later in the day, but if you're paying attention and you look at your first measured leg and then you just look for a similar measured leg, you see that puts you right down in that vicinity, and you end up still knowing pretty much where to look for an exit at. And in addition, measure the first leg up once we start it up again, but you really know what to shoot for at this point. But if you're wanting to know about a possible overshoot, you notice this puts it way up here. We actually overshot the measured move. So anyway, that's a nice little tool to point you in the right direction. So, but you can see the range, and there's clear. Notice that we've got a clear channel coming down. You get a break, and new low. We reverse. We got a clear channel moving up. You get a break, new high. You reverse. You've got a clear one moving down. You get a break, and new low. And even on this one going up, you get a clear trend channel going up. Or I only have the line on there, but there's a channel there. And you get the break, new high, then on this leg back down for this one, you get a break, new low, then you're moving up, you get a break, move to a new high, and so forth. So it all played out pretty well today. This one broke a little bit early. Notice we have to overshoot, so a lot of times that'll lead to the break, and we got that break, and there's actually two measured legs up to a new high. Do you know you're always going to get that? No. You can see that you basically still got a little more than a measured move there. So, but anyway, make a long story short, nice trading day. Everything pretty much played out um, by our price action rules. So let's back out, talk about the trades, and we will go from there. This one, notice we're coming down. We just kind of started going sideways from one end to the other. We actually got two legs up. There's a second entry signal bar that sets up. There's actually a second entry right there when it broke below, but you can't use this for a signal bar. It did break higher here and turn down. So that's a reason to consider maybe entering there on a stop. But I think you're better off to wait and just see what happens. And we just end up kind of going sideways. But notice what happens here. Notice we got a new high and we pulled back, and then we break lower, and then we pull back again. So that's right off the trend line. Really, you could have gone short on this one. So there's really two entries right here. So let me get it right. You really could have gone short 3 times there, but after this one went sideways, I would have been a little more leery of that one. That's a pretty nice signal bar. But if I wasn't already in, I'm definitely going to enter there. And when it breaks higher here and turns back down, and it goes up out the first side, comes down. So I really like entering there, but there's almost 3 entries. I like actually adding on there if you're not out, and you probably wouldn't have been out unless you used a limit order. And you notice that if you'd waited on the break below this bar and dropped a limit order, you could have gotten filled way back up in here, more than halfway in that bar, and then it went down. And then Either way you entered, any place you entered there or anywhere you entered, you would have had a runner here. And you can ride that on down. And if you waited till the first bar or break bar, the first bar that closes outside, that's generally the way I like to play it, which would be that bar right there. That gives you a 4-point move on your runners. And so a couple of good entries there, and then notice what happens. We actually notice how we don't get down to the trend channel side here. We turn up early, and then we get a break outside here. But notice what happens here. You got a new high, pull back first entry, pull back second entry. It fails. There's a double top there right off the EMA. You're looking for a retest to the low. All kind of reasons to go short. And that's another real quick, easy drop right there. And then notice what's happened here. Now you've got this channel working down, you get a break, a new low, and you're a good bit away from the EMA, and you get this reversal bar that opens, closes, or trades down and closes all the way back on its top. So it's a little aggressive, but that's a nice place to try to catch the low of the day. And guess what? If you caught that trade, you can ride this all the way back up to the other side. Or you could have actually right here when you got a break below the, or it would have been right here, the break before the first close, after the next bar that once you get a close outside. And that would have been right there. And so if you just caught it to right there, one signal bar, one contract, you just rode it to right there. It's 20 points. And if you rode it all the way and got out a few ticks before the top, now let's redo that. I thought it would add it there and tell you. But let's just say you got out 3 or 4 ticks. That's 28 points almost. So you only need a runner or two like that, and that's why I like these trades. They're a little aggressive, but when you jump out there and you take a little risk, when you're right, you generally get rewarded handsomely for taking on the extra risk. And that's why I like these trades. And they're really, once you understand what's going on, they're not that risky, but you need to understand what's going on. You need to understand that, hey, there's a channel working now. We had a break, a new low, and there's some support right across here, strong support. And so you can see all the matching lows like a failed break lower, but we're way away from the EMA. That's a reversal type bar. We're looking for a reversal. But notice what happens here on the long. This is a reversal pattern. We push through the EMA, pull back, and we get a failed second entry short right there. Notice the new low, pull back first entry, pull back second entry. It fails. Notice the trend line working right up through there. And this is your third touch and your confirmation. It's a little bitty bar, so real small risk to get in it. And again, you catch a runner. And if you caught that one and rode one contract up within a few ticks of the top, still 24 points. And this is not near as risky. This is the reversal pattern we teach. And notice this too. And somebody actually sent me an email. I think yesterday I was saying that we draw it off the closes of these bars. It's not, there's a close or two in there, but really I'm drawing it off the body of the bar. So just in case anybody got confused on that, hopefully you understand what I mean now. These are the bodies, the green part and the red part, and the other part we call them stems. Some people call them feathers. I think there's several different names for them, but I call them the stems. And if you just draw this off of those bodies, I usually like to call it the closes, but in this case it's the opens on the green bars. It's just the closes on the red. And this is one of those where we talked about yesterday. If you just drew this off those bodies, look how it gives you the trend line pretty much the rest of the way. And that one was pretty easy. And it doesn't work like that all the time, just like I said yesterday. And you may have to adjust it slightly. But it gets you in the right vicinity a lot of times. And this one would have got you, if you just drew it right off those bodies, I mean, it's right on the money. This is just a really good example of it. They're not always that clean, but in this case they were. And when you copy that line and drag it up, you can see it fits just as clean off the upper side. So very good opportunity. And then look what happens. We pull back, and the only reason this one is green and not blue is because it didn't tick lower here. There's a double bottom here and a little higher, and this is a second entry here. There's still a form of a second entry, but I would have liked it better if it would have ticked lower. So the fact that you're kind of going sideways there, you know, we didn't close on our high here. There's just some reasons to be a little bit concerned about that one and wait and see if it breaks up and then pulls down and breaks lower and then goes. But aggressive traders are just going to go ahead and take that. And again, you would have caught a runner on that one. So let's just say you don't get in until there. But again, that's a little aggressive. So let's say you don't get into there and you hold a runner. There's another 16, almost 17 points. And that's getting out well in front of the line there. And it actually turned down right off of it. And that you would have had it right across that high right there. And notice where it turns to the tick right off that same spot. So very good entry. You got it. There's a second entry here, but notice you're just kind of in the middle of, and there's probably, or there's not probably, but there's a midline in here. And you can see it right there. But that really makes this trade even less, I like it even less because of that midline. But notice how you get a second entry, you pull back, you get a first entry, this makes a little lower high, and when it breaks above, that's a second entry. Even though it didn't go lower here, it's still close enough to be a second entry. I like them where they both go lower, like this one. You get one, you break higher, then you go lower here, and then you go higher. That's a better second entry. But on a real strong trend, these sometimes you have to take them where you don't get any trades. And by this time, this is a pretty obvious strong trend. Now, another thing that I would have looked at is there's your first leg up. And so from here, you're looking for another leg, and you've already got a perfect measure. I mean, that's a perfect measured move. It doesn't get any better than that, to the tick. And so that's another reason I didn't like entering there. Notice what happens. You get the second entry. It's kind of in the middle of no man's land. It makes a new high. Then you're pulling back. And notice that you came up short here. And so you'll probably get an overshoot here. So be careful. That would lead you to say, hey, I probably don't want to take a first entry long right here. I better wait on a second entry just in case, or let this play out. There's actually a trend line working down through there. Like so, right off those bodies, I should say. About to say closes, then you get a close outside, a move to a new low, and it bounces. So there's one reason to go long. It's a second entry long, counting off the high, pull back first entry, pull back second entry. This was actually your signal bar, but what happened was it traded down and closed and ticked below, and then turned and went up out the other side. And I would have had to stop waiting there. It did end up backing up a little bit, but it still closes more neutral. So if you didn't go long here, I wouldn't go long above this bar. I would have waited, but I like going long right there, and you're okay if you go long right there. And that turns out to be another nice trade right there. And again, you could have caught a runner on that one and ridden it up. I mean, every one of these trades had a runner on it. And then notice you got a new low there, and you go higher. First entry short, and then there's a little second entry long, but I don't like that one. It's right into that resistance. And then you get a failed second entry short that reverses and bounces right off the EMA. So I like entering again there, seeing if we're going to make it to the previous resistance up there, and that's exactly where it goes. So another good second entry. Really, this is not a second entry counting off the high, but it's a failed second entry counting off the low, because there's your low, pull back first entry, pull back second entry, it fails, it bounces right off the EMA. There's a double bottom there. There's support across there. There's multiple reasons to like going long right there. You can see that. Just go long, quick, easy move. And then notice what happens. You pull back first entry, pull back second entry. It fails. Uh, you get a nice bearish bar. I like going short right there. And again, the main reason is because you've got a break of this channel, two legs to a new high, and you turn down right off the resistance area. This one I would have liked it better if it went a little lower and then came back and didn't get back through. But all the same, I think it's a pretty good setup. It is a second entry. It's a bearish bar. And then you get another opportunity right here. I don't like the signal bar here, but very similar to over here. And notice this. This was a shorter term trend channel. And then this was like a little spiking channel with another longer term channel working lower. And but notice what happens. This is actually the first break of the short term one, so you're still looking for a low. And somebody asked me this question, you know, how do you know which channel or which trend line's right when you got a short? Well, they're both right. So just play it like, so even if you didn't have the bigger one here, you didn't need it because this would just set the trend line. It didn't really give you a trade based on this new trend line down through here. You wouldn't have had that yet. So you're playing this shorter term one, and this is the first break, so you're going to get a retest of the low most likely. And notice we pushed on through the EMA. We got a second entry long, which you can't go long there. You actually had a second entry short right here, but there's also, this is a little trading range, congestion area, and that's a failed break higher. But what I liked here was this is a double bottom, so you can count it as a new low. Pull back first entry, pull back second entry, but it broke higher and then turned and came out the other side. So I like going short there on a stop, and if nothing else, putting a sell stop right there below that big bearish bar. But there's a couple of different reasons to enter that trade, regardless of whether you probably didn't have this longer term trend line in here. All you would have had was this short term. But you still have your reasons for going short. You're looking for a retest of the low. Now off it goes. And draw your trend line right here. Earlier I had it drawn a little higher, and it's probably still all right, a little higher. Doesn't matter really where you draw it. You still get the same thing down through here. And you get a break here. And it takes a little longer for it to come back down, but it does. So anyway, you continue to go lower. There's a first entry right there. I don't like it. There is a failed second entry long right there. So if you saw that, I'm okay, and you had that on your chart, I'm okay with you taking it. Notice that's a new high, pull back first entry, pull back second entry, and that's two measured legs down. So if you saw that, I'm okay with it. If you didn't have that and you just took a first entry there, I'm not crazy about it. But there's reasons to take that trade. It's a little close to the lows there, but on a trap, a lot of times you're not as concerned about that. I'm going to make it green because there's some reasons to be concerned about it, but it is a trap, and we're looking for prices to go lower, and most likely all the way down to here. So, or actually at that point, you might have been looking for, yeah, you would have had your line in that place right there. So you're looking for prices to come down to here. But then you get a second entry short right here. Notice the new low, pull back first entry, pull back second entry, and you get a nice bearish bar. Again, it broke higher and turned and went out the other side. So you could have gone short one tick below that bar. And if you waited on this one, it didn't quite close on this low, so I would have waited on a break below it and maybe used the limit order, see if you get a little better entry. And you would have. You kind of got filled halfway back into that bar probably. And then it pulls back and touches the trend line again. It gives you another big bearish bar. Again, it's close to that low, but you're looking for prices. You're still playing this channel. You're looking for prices to come to the other side. You're looking for prices to come to here. You got to be a little concerned about that low right there. But if you see the big picture, you're going to want to go short right there. You just can't hardly, if you understand what's going on, prices are trying to head here, and first they're trying to head to the low of this line and then here. And this is the bigger pattern here as well. So, but for whatever reason, we move down pretty quickly and pretty far, but we don't get to this other side. Well, what is that telling you when we start heading up? Be careful going short here because um, we're probably going to break higher. Since we came up short on this side, we're probably going to overshoot it over here, and that's what happens. You get a big bearish bar in a first entry, but like I said, I would wait on a second entry here. And there's a shorter term trend line, and that's the first break. So wait on a new high, and notice what happens. We bounce up here, we make a new high, but there's no setup here to go short, and we break slightly lower on the second entry. It fails real quickly, goes up. So we don't, since it's a failed second entry short, we don't care what that signal bar looks like. It's somewhat bullish to bullish neutral, but it closes in its upper third, the upper third there, or the bar, upper 2/3 really. And this is what you call a reversal pattern. We don't have a break of this thing. This is the first one. So you're expecting a possible retest of the low, but there's not a setup for that there. But look what happens here too. You push right through that EMA, no resistance. You pull back. You kind of set this trend line with the first two swings, and you pull back. It confirms it there. You get a failed second entry short. It reverses. So that's a nice looking little reversal pattern, and that's a great move. They trapped a lot of people there, and look at it go. A lot of these people that have been short got to get out because you don't know if the support's not higher and we're going higher again. So, but that's a great setup right there. Study that pattern so you know it. We saw one both times here, and look at it go. You pull back. This is only a first entry. Again, I wouldn't take that first entry. Trend line working through there, so no break yet. So there's just not a good reason to go long right there. You got to wait. See if you get a second entry. You don't, it just shoots to a new high. And look again, now you got to break a new high. You get notice that's a new low. Pull back first entry, pull back second entry. It's a big bearish bar. We're a good bit away from the EMA, so we're probably headed down to here at a minimum, even if we're going to get another leg back up to the highs. But we just keep going lower here. There is a second entry short right here. Notice how we push through the EMA, pull back first entry, pull back second entry. It's right off this trend line if you draw it off those first few bars there. There's some reason to consider this, but it's not a perfect signal bar. Again, it's one that I'll give it. It's probably a green one, but I didn't like it and I wouldn't have taken it. But if you want to be aggressive, it's worth considering. Turns out to be a good move. And now look, you got two measured legs down. So be careful what might happen here. And you make a new low, pull back first entry, pull back second entry. This was really your signal bar. This one's right off the EMA or the trend line as well, and it's pretty bearish. So when you get a break below it, you could really use a stop there. There's plenty of room. But what I'd do is let it break lower and put a limit order. And notice what happens. It breaks lower and backs up and then goes lower. So, other smart traders know that. It's not a perfect setup, so they play it a little safer with a limit order or whatever. And look at it go. And again, notice we came up short. So, hey, when we start heading back here, if we do, you may get a break. And that's what happens. You do get a second entry short right there. But again, not a very good setup. I think you have to wait. And you get another, if counting off the ties, you get a second entry here. Again, not a very good setup. Wait and see if you get the reversal pattern, the failed second entry long, and that comes right here. And look at that big bearish bar. And again, it broke higher and turned out the other side. Since it's a failed second entry long, you could go short right there, or you could wait on this bar and drop your sell stop right there. Either way, it works. I don't think I would have waited on this one, simply because you got to go short at the very low. So it's just a little suspect. And this is also a breakout pullback short because you got a little support across there and it breaks lower and pulls back. So multiple reasons to like that short. And look at it go. You could have caught a runner there. And then we bounce right where the previous support was across here. We push right through the EMA. There's a second entry short right there, but you've already had a break and a new low here, and you've bounced off the low side of the channel already. So I would just sit tight and see what happens. Notice you got a first entry, pull back, or you got a new high, pull back first entry, pull back second entry. Nice bullish bar right there, right at the EMA. It's your reversal pattern. I like it. And again, you would have caught a runner on this. And look at it go. And then it comes back here. This is really two legs back. There's two moves in that first leg, and then a little two swing leg in the middle, and then another measured leg down, and it bounces. There's your first leg. There's your second leg. It actually went a lot farther, and well, I wouldn't say a lot, but it went several ticks lower. And it's not a great signal bar, so you got to be real careful. And also, I didn't have it on here, but you got your short-term trend line, a little break, a new low, and so there's another reason to go long. This is the first break, so you're looking for a new high, prices to come test this, but this thing just takes off. And it's not a great signal bar, so it's not a blue, but if you're wanting to be aggressive, that's one you'd consider. And if you caught this one, you catch a runner as well. It just takes off like a rocket. And notice that's a new low. Pull back first entry, pull back second entry. So when it bounces right off the EMA there, you really could take that one, and that one's blue. The red bar is not perfect, but I like the next bar coming off the trend line. And so if you're still trading, I'm even all right with that one. You do have a break and a new high, but because of that trap and the fact that it bounces off the EMA and the trend line, and we're not back up here yet, I kind of like it. So, and that was pretty much it for the day. So another really good trading day. I mean, I don't know how many. See if this adds up. Yeah. So there's 30. So that's about a 30-point range. Well, it means it's about a 15-point range. So 15, 15, 15, 15. And it looks like we're going to head back down here before it's over, where it's actually in the overnight session now. So, you know, it's 15 points each way. And that's pretty good trading day. So just measure that again. No, that's 30. That's so actually when we came back. So that's 30 points each way. So that's a huge move. You know, 27 points down, 27 points up, 27 points down, 27 points up. So just for easy math purposes, we'll call it 30, 60, 90, 120 points in one day, and we only closed down 4 or 5 points. It's a pretty incredible day. So, but anyway, I'm not going to hang around anymore. I'm not going to waste any more of your time. I'm going to wrap it up for the day. We'll be back again to do it tomorrow and wrap our week up tomorrow. So, but I'm out of here for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.